Good morning to everyone, and a special welcome for those that's joining us online as well via the webcast live streaming services. So today I want to share with you the story of Atlantic Lithium, where we've come from, what we are doing, and where we are building a mine. So if I kick off with the project, we've got a 35 million ton resource in Ghana. We've been working this asset since 2017. In fact, we gained access to site in 2016 and looked at some historic work. In 2017, we opened up some trenches and some test pits, and in 2018, we drilled our first hole. Our first intersection was 128 meters at 1.2%, so quite an impressive exploration effort back in 2019. Since then, we've drilled out 137,000 meters on this project, and we now have a resource of 35 million tons, grading at 1.25%. We've got a reserve of 26 million tons, grading at 1.22, and we've just released our DFS a couple of weeks ago. So we've now been on the road for a few days. It's good to have a break in Noosa for a few short breaks before we head over to the States next week, and then to London the week after to go further with this roadshow. Just a capital structure for us. Our market cap yesterday, $277 million Aussie. We've got $11 million US in the bank from our last quarterly. And we've got a good cornerstone shareholder. From the start, this company was formed in 2014, and we were originally a iron ore explorer. Started off in West Africa with an iron ore asset in Gabon. Very quickly realized that that project's not going to work out, so went on the hunt for critical minerals in 2016. So have been really working at this for a while. So Saw came on board. From that stage, they're a South African-based, privately owned mining company, so they hold 25% of the register. And then we also have a great partner in the American-based Piedmont Lithium, who currently holds almost 10% on the register, and is also a JV partner on an asset level at the project site. So a bit of the DFS. As I mentioned, the DFS came out a few weeks ago. Just amazing fundamentals in the project. 12-year mine life, payback period very quick, 19 months. The project will generate $1.5 billion over the 12-year mine life, and we'll be producing on average 360,000 tons of spodumene concentrate every year. In addition to that, we'll also produce a secondary product, a lower grade spodumene of 4.7 million tons over that period. And the capital cost is relatively low at only $185 million. So where are we today? We've completed the front-end engineering. That was done by engineering house in Perth, Primero. Primero is quite well known for spodumene DMSs. They were involved with a number of construction activities as well as operating assets in WA. What we are doing at the moment, we've commenced stage 2 feasibility studies on a couple of expansion options for the project. We're looking to break ground in September 2024. The first phase of our project will be modular DMS units. So what we're looking to do is generate cash while we're doing the construction of the main DMS. These units are used extensively in South Africa in chrome and diamond operations. So we'll bring these to site and we'll generate some cash while we're constructing the main plant. And then we'll be constructing that main plant ready to put ore through in January 2026. At the moment, we have applied for our mining lease. Once we receive that mining lease, which we are expecting to come through this quarter, there's about a 9 to 12 month process to go through the EPA permitting. Really 2 phases associated with that. The first one is an environmental impact assessment, and then the second one is working with the local community in terms of acquiring the land that we need access to construct and build the mine. As I mentioned, we've got a partnership with Piedmont Lithium. Piedmont Lithium is funding the bulk of the project cost. They've spent almost $30 million to date on the project to get us through exploration, feasibility studies as well. And they will also fund the first $70 million of the project, and there's an equal share of capex post that initial $70 million. Piedmont's got offtake with both Tesla and LG Chem, and 50% of our offtake is unencumbered. There's very few spodumene mines coming in line on the next 2 years that have spodumene available for the market. So we're looking to capitalize on that and use that as leverage to close the gap in our funding requirements. Then from a capex perspective, the total capex for the project is $185 million. The bulk of that sits in the main industrial size DMS plant, and then we also have a provision of $15 million for those modular DMS units. The first $70 million from Piedmont will take us through to July next year, so we do not need any funding for the next 12 months. And then, as I mentioned, we'll split the capex 50-50 between ourselves and Piedmont following that. So what that means is 70% of the capex is taken care of. So we need to acquire that additional $58 million to get into production. We intend to use our offtake as leverage. We're about to commence a process to look at offtake partners and place some of that offtake into the market to close that funding gap. From an operating cost perspective, our ore process now has 94% in reserves. Our C1 cash cost is $377 per dry metric ton, and our all-in sustaining costs, which include taxes, royalties, and sustaining capital as well, is $610 a ton. So quite healthy margins over the life of mine of almost $1,000 per ton. So really great project economics out of this. Then if I just touch quickly on these modular DMS units we are looking at, as I mentioned, they manufactured in South Africa and currently used extensively in that industry. We haven't seen this being employed in spodumene anywhere around the world, but we're quite confident that we can apply this technology to spodumene processing as well. They will generate about $170 million during construction, so that $185 million capex that we have will be generating a significant revenue stream while we are constructing the main plant. A lot of benefits out of this as well. It will cover any overruns. It also gives us the opportunity to train our local staff to run DMS units in Ghana while we are constructing the main plant. Then in terms of infrastructure and how we get the product to port, we're situated 800 meters from the national highway that runs all the way from Lagos to Abidjan. It's a bitumen road. Our closest port is 110 kilometers from site, which is the deep sea port of Takoradi. We also have access to another port 140 km the other way, the port of Tema. So our preference is to go to Takoradi, which export about 5 million tons of bauxite and manganese as we speak. So the picture at the bottom left there is ship loaders that was commissioned in February this year. That ship loader has a capacity to export 12 million tons, so plenty of spare capacity for us to get onto that circuit as well. Then in terms of power, Ghana has relatively cheap power at about 14 to 15 cents per kilowatt hour. It is fed 50% by hydro and then the balance by natural gas. We've got a power line running across our site, so one of our first activities is to relocate a high voltage transmission line. So we'll build a substation and we can pretty much tap into power very early in the piece. In terms of exploration and upside on the project, we've currently only drilled 3% of our tenement package. That 137,000 meters we've drilled to date has all been focused around the footprint that we want to start the operation and around the immediate mine corridor. We haven't put a single drill hole more than 5 kilometers away from the initial operating area, and we've been very deliberate with that. You know, we were looking to create a resource that has critical mass, that has enough reserves so we can put put a feasibility study together and bring this project into operation. This year we're spending $8 million in exploration, of which we're covering 4 million and Piedmont is covering 4 million. And we're looking to expand on a regional base, so we're following the same methodology we did to discover the Ewoyaa. We're doing soil sampling and auger drilling on a regional scale, and the purpose of that is to identify new targets. So as we approach production, we see a clear pathway to production. We will then send the RC rigs out to follow up on these targets and do more regional exploration from that perspective. If I can just leave you with a couple of things. Really good project in Ghana, really good jurisdiction. Ghana has 16 operating gold assets. They've overtaken South Africa as the largest gold producer in Africa, so very pro-mining. They understand how it works. They want us to be in the country. Very excited to be part of the critical minerals process, as everyone is. So Ghana is a good jurisdiction. Project has great economics, $1.5 billion in NPV over a 12-year mine life, with a lot of upside from an exploration perspective. Thank you very much.